Welcome back. I'm Pratap here. Today is the 25th April 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our YouTube channel. I also placed all these videos in an order in a playlist Supply Demand Zone Price Action course. The link to this playlist is also provided in this YouTube video description. So if you click the link, you will get into this page and then scroll down to the bottom of this page. And here, starting from lesson 1.1, you can access all the lessons in an order one by one and strengthen your skills related to Supply Demand Zone Price Action. I also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis discussion. Yesterday we identified 9 high liquidity zones from daily and 75 minutes time frames. So out of which Bank Nifty has given a trade, but this is a last 1 hour trade. High risky trade last 1 hour for intraday traders, I agree. But in F&O segment, definitely you can plan a trade. Maybe cash segment, it is not possible in F&O segment. And you can exit once it reaches the target. That way you can plan a trade. So we got a perfect execution today. The last 1 hour trade in F&O segment. Let me show you how. But before that, in today morning, I released a special video about how to fine tune this supply zone. Maybe this could be a very good study and might be helping the traders. That is what my intention in behind releasing. But exactly the way how I explained in the video, it reached the entry area. I'm not going to show you again how to fine tune this zone because already we have a special video. Please, in case if you did not watch the morning Bank Nifty video, please look into that. How I fine tuned, how exactly it respected the price, respected the fine-tuned 5 minutes area. So I'm directly getting into the 5 minutes time frame. So this is what we fine-tuned in today's morning video. This is one fine-tuned area. This is another fine-tuned 5 minutes area. See what happened today? During the last 1 hour of the trading session, prices entered and gave an entry here. You may get an entry either in 14:30 hours or 14:35 hours. 14 hours, 35 minutes. See the moment it went and came down and how prices came down. But the question is where to exit? The 5 minutes zone. This we have a drop, 3 base candles and a rally candle. This is the 5 minutes, but prices didn't reach up to this. But at some point of time you need to exit. The best option is a trailing stop loss using a 1 minute time frame. If you use a trailing stop loss, see here you have a rally, 3 base candles and a drop. This is the first candle itself. This is the first 1 minute supply zone. After that prices came. They were near to this supply zone, picked up the orders, came down. Once again it reached this supply zone, picked up the orders, now it came down. Now you can drop, rally base drop. Maybe you can consider this as a tiny candle that way. It's not exactly, but because it is a trailing stop loss, some kind of compromise and you can draw the zones. But prices never went up to that. Further they were going down. Again you can draw a drop, 3 base candles and a drop candle. Again prices moved, picked up the orders and again came down. So where you need to exit? Now because by the time prices are entering here, we are almost reaching to the last 15 minutes of the trading session. It's not wise to keep our positions the last 5 minutes or 10 minutes. It's better to close. So in the 1 minute, look for a nearest zone. We have a rally base, rally is there. You just draw the zone, 1 minute zone, because we don't know until this 5 minutes it will reach or not. Because just before 5 minute zone, there is a 1 minute zone which might hold the prices. So that is the reason why the moment you draw the zone, see here, finally prices reached this 1 minute zone, and from here it picked up the orders and slightly moved up. This is the way. This is one possibility, or another possibility, you can consider this as a ERC candle, and this is the 1 minute supply zone. And in this candle, supply zone is violated and you can exit. But this is the last 3 minutes of the trading. Such a huge risk we cannot take, pushing the exit into the last minutes of our trading session. And this is the best choice to exit here. Somewhere here, either here or little above, or randomly you could have exited somewhere here or here. Because we are entering into the last 10 minutes of the trading in this area. But this is the best choice because exactly reached. Anyway, you can exit in different locations, but what is the maximum we captured? That is what I am going to calculate here, from here to here in this 1 minute zone. And this is the way Bank Nifty has given 2,736 rupees profit during the last 1 hour of the trading, which is a 2.8% ROI as per one futures margin cost. Because Bank Nifty future margin is around 97,000. So compared to the other futures, its value is less than 1 lakh. So that's why you got ROI, even though the profit amount is small compared to the other earlier profits, but still you got 2.8% ROI, intraday ROI. Remember, this is last hour of the trading. Why we are taking last hour of the trading? Because we fine-tuned. We have such a confidence on our zone. The one we fine-tuned, we know that it will work, and it worked. The only problem is it doesn't have much momentum because it is a last 1 hour trade. Last 1 hour, if it is not last 1 hour trade, maybe you would have got a very good profit. But anyway, this is a successful trade. This is what I already drawn these zones. And the morning before trading starts, I have published the video. At least it will be helpful to some of you people so that you know where to. But those who are planning trades in the cash segment, definitely this is not a trade for you. Because I think last 45 minutes or 1 hour, your brokers does not allow you to trade in the cash segment. I mean intraday trade. And short trades in the cash segment, you can't carry forward to the next day. But F&O, it is possible. F&O, even last 1 hour, you can take a trade. Last 25 minutes, last even 5 minutes also, you can trade. Okay, this is the only one we got the trade. But there is one more trade is also there. But I don't know how many of you accepted. So that is Dr. Reddy. It's a huge profit. If anybody would have taken it, it's a huge profit. It is a daily demand zone. We have a high liquidity fine-tuned zone area here. Yesterday we didn't take because we don't have clarity whether it is a 5 minutes. And this fine-tuning also I am not going to explain because you already, we already fine-tuned yesterday's video, HLQ analysis video. You know how to fine-tune. Just directly I am getting into the 5 minutes time frame. So this is the 5 minutes time frame. This is a tested zone. Because this is a tested zone, yesterday when prices entered into this zone, we didn't plan a trade. Otherwise, you would have got a good profit yesterday. And also we don't know this is a high liquidity zone. When you don't know it is a high liquidity zone, you can't take second trade. If you are having a confirmation, yes, you can take. So by looking into this, how do you get the confirmation? No. If it is having multi-testing, at least 80% we can believe it could be a high liquidity zone. That way we can take a risk. And see, again it gave one more test yesterday. And again moved. So that means same area, it is picking the orders. And moreover, see here it went deep inside. But next time it should go even more deep, but that didn't happen. That itself is an indication. In this area, institutions are adding new orders into this area. This could be a possibility high liquidity. See, earlier it went more, at least half of this zone orders are, but there is a strong rejection. Next time again you see, previously wherever the order flow is consumed, it didn't go beyond that. That means institutions filled new orders here. That's why without crossing the low of this candle, before itself it started moving up. That is the first clue. That is our first clue to confirm this could be a high liquidity. It's not 100%, maybe. You can assume this could be a high liquidity. See again, third time what happened? Exactly at the distal line, it started moving up. No doubt, this is a high liquidity area. See, today morning what happened? Prices came close to that within this buffer area, entry buffer area. Prices reached, came very close. See the rejection, huge rejection. If you look into 1 minute time frame, this is today 9:16 candle. Prices came very close to this entry buffer area and see the rejection. Once again they came, see the rejection again moved up. That means this is a high liquidity area, no doubt in that. We got a confirmation, we got the initial doubt here and we got third again. So definitely if anybody would have planned by keeping some entry buffer, you would have got a trade. Very good profit you would have got, extraordinary profit. Probably over near to 13 to 15% ROA you would have got. Because see here 4.5% move it has given. 4.5%. 4.5% means probably you will get around 30% ROA minimum you will get. Not less than that. Okay, let us see with curiosity how much profit we would have got if we would have taken a trade somewhere here. Let us assume somewhere roughly 5930 here. 6218 closing I am calculating. 6218 close price of Dr. Reddy minus, this is just curiosity. Let us say 5930. You got 228 rupees, 288 rupees profit. Let us see margin calculator. Today is the expiry date, so it won't allow. Let us go to May. This is just approximately, I am saying, into 125, you would have got 36,000 rupees profit. Into 100 divided by 1 lakh, maybe by the time it reached, definitely because it priced, maybe we can say, maybe 1 lakh 32,000 around margin will be there. Not 1 lakh 38, definitely 1 lakh 32 or 33. So let me give at least 35 for the benefit of doubt. Let us reduce our ROI by increasing this value. 1 lakh 35,000. Let us assume margin cost at the time when it reached the demand zone. It could be even less also, but anyway, adding some extra doesn't make any difference. See, 26.6% ROI, close to 30. 26.6%. Say 1/4 of your investment you got. You would have got. Anyway, that is a different story. Because we don't have confirmation, this is only assumption. This could be a high liquidity. With this assumption, if anybody would have taken, because in the analysis discussion yesterday we discussed about this zone. because it is having multiple tests. Yesterday we discussed this point. Please listen yesterday's video. Maybe it could be a high liquidity zone. And also I told if anybody wants to take probably a little more extra risk, and there is nothing wrong in taking a trade if your risk permits. That is what I told. But prices, you need to add the buffer, then only you would have got the entry. If you were waiting prices to enter inside, you would not have got the entry. Such a good stock it is. How we are assuming based on multi-testing, we are assuming this could be a high liquidity. But anyway, I am not considering as part of our Excel sheet. But this is one great opportunity as provided in terms of assuming it could be a high liquidity. Dr. Reddy, this is another opportunity provided. That is what you should understand. And apart from that, the other stocks, let us look into them one by one. Bosch, this is a daily high liquidity zone, demand zone. How I fine-tuned, let me explain. First of all, this is a daily zone. We have a rally, base rally. This is the daily high liquidity zone, fine-tuned with 75 minutes time frame. Here we have recently created drop, base, rally is there. And previously created rally, base, rally is there. And here again you have LOTL, one more LOTL, drop, base, rally is also there. So total we have 3 75 minutes high liquidity zones are available here. Now let us fine tune with 15 minutes. See here inside 15 minutes you have a drop, 2 base candles, rallies, candles. This is the way 15 minutes zone we can draw. We have a drop, 2 base candles and a rally. And in this fine-tuned area, LOTL 75 minute zone, we have a drop, base, rally is there. And in this, again we have a drop, base, rally is there. This is the 15 minutes fine-tuned area. So we have identified 3 15 minutes fine-tuned areas. Now let's go to the 5 minutes to identify the actual order flow. The first one. Look here. Here, order flow is not really very convenient here. If you want to draw a 5 minute zone, it's not really. See here we have 1, 2, 3, 4 rally. We have 1, 2, 3, 4 leg out. Leg out is not really great. So not really convincing structure. So that's why what I did. See here. See exactly they are picking in this candle, in this candle, in this candle. They are picking the orders. That means order flow is at this distal line. There could be an order flow here. That's why I went back and looked into this. Here we have an excellent 5 minute zone. We have a drop, 3 base candles and a rally candle. Of course, this is a medium size leg, part of the base. We have 2 excellent base candles here. So drop, base, rally. This is the way 5 minute zone is drawn here. And this 5 minute zone is working very strongly. Before that, see here price action clue. Prices didn't reach up to here, further moving up. That means this is the place institutions kept the strong order. Maybe that could be a high liquidity area, could be. See exactly from the proximal line of this zone, 5 minute zone, they are picking the orders, they are not going. See the rejections are coming from here. So definitely we can plan a trade in this high liquidity area. That way we can. So this is the one, but this is fine tuned with this 75 minutes and 25 minutes fine tuned, 75 minutes and 15 minutes fine tuned area. It is having the confluence, zone confluence. But confluence is at the distal line. This is how sometimes institutions will plan to trap us. That's why we should be carefully identify these zones. And here again we have a 5-minute zone is available. We have a rally, 2 base candles and a rally. Within this LOTL 75 minutes area, this is the fine-tuned 5-minute zone. And here again we have a tricky. Within this 75 minutes area, we have a ERC candle, we have a base candle, we have a rally candle. We have a very good order flow. Not only that, if you observe carefully, here also you have again at the distal line of this zone, at the distal line of this 75-minute zone, we have a rally, 2 base candles and a rally, and exactly they are picking the orders from here. This is one candle. This is even here it picked up the orders. Even here exactly it reached the distal line. That means this area is also there is a strong order flow. Maybe this may act as a trap also, bear trap. That's why institutions might have set an area like this, an order flow, 5 minutes order flow. So this is about Bosch, but prices didn't come. Next one is Crompton. This is also a daily high liquidity area, and I already explained you in our yesterday or day before yesterday. In Crompton I explained one of the videos. So please refer that analysis in case if you did not listen how I fine-tuned, because there is no meaning in repeating again. It is the same analysis. So prices today entered into the zone, they didn't enter into the fine-tuned area. That means order flow in this area is very strong. See the rejection. Next time when prices enter here, definitely we get a very good trade from here. Dr. Reddy, we already discussed how we missed a high liquidity 5 minutes trade. Maybe it's not missed. If anybody would have taken, you would have got a good profit today in Dr. Reddy. Gujarat Gas Limited. This is also we fine-tuned yesterday. Today didn't come, so I am not explaining how to fine-tune. Please refer yesterday's video. Same is the case HDFC Bank also. HDFC Bank also a daily zone. Already I explained this zone how to fine-tune, and this fine-tuned area is already tested 2 times. Second time went deep inside. So prices didn't enter. How to fine-tune I already explained in our yesterday's video. And same is the case with Sun TV also. Sun TV is a daily high liquidity supply zone. How we fine-tuned I already explained, but again prices didn't enter into this area. We didn't get a trade today. Please refer your yesterday's video about how we fine-tuned this zone. And next one is Conquer. Conquer, we know it will be violated. Zone will be violated easily. See here, this is a 75-minute zone, Conquer. This is a 75-minute zone. We have a rally, 2 base candles and drop. The structure, 15-minute structure is very bad inside this zone. I'll show you. We know, because we know when a zone will be violated. That's why we didn't find you easily gone. The zone, how easily it is violated. Look into the 15-minute structure. You will get clarity. It's a very bad structure. See all this is the ERC candle. Very huge ERC. And this ERC you can't use as a leg out. Because this is a rally related ERC. It's not a drop related ERC. If it is a drop related ERC, definitely you would have considered this as a leg out. Even if you add the hidden body, you get a very small hidden body. So this is like a rally candle. Even if you consider this is a leg in base, and this one you cannot consider as a drop. You have to consider as a rally again. But this rally, the close should be above this zone, not within this zone. So anyway, this structure is not at all good. 15-minute structure. There is no meaning in planning a trade in this zone, because we know this zone will be easily violated. That is what happened today. How easily the zone is violated. No resistance at all in this zone. Because our concepts, how a zone will be violated, would have helped you today. Because many people not aware of when a zone will be violated. Because this is a 75 minute zone, they simply keep an order. And their stopped out will be, and they will go out with stop loss. But we avoided such kind of failures. So you must appreciate yourself first of all, because today you are in a position to understand when a zone will be violated. And many times your analysis works in a perfect way. Look into the last 6 months HLQ zone analysis videos. Every week, at least 5 to 6 stocks every week. 5 to 6 stocks we will see. Zones will be violated well before we know the zone will be violated. So it is a proud concept. The reason is many supply demand zone traders, they are not aware when a zone will be violated. But we identified an approach, a methodology. We identified a methodology that confirms when a zone will be violated. And our methodology, at least it works in 80% scenarios. 20% scenarios, what will happen? Institutions create a rally base. Instead of creating a rally candle, they create again a drop candle. That way they create a new zone. But that new zone we get opportunity in the next retracement. And people who are taking a short orders here, it is a lucky trade for them. It is a lucky trade. We don't want to depend on the lucky trade. We want to depend on the perfect analysis trades. Even if you miss a lucky trade, no problem at all for us. First of all, we don't want lucky trades. We want always perfect analysis trades. And the last one is a Havels. Havels is also a 75 minute zone. This already we discussed yesterday. And this is already a tested zone. So no more order flows here. And moreover, I am sure some of you might have considered this. I am not convinced with this. You might have drawn a zone here. I didn't consider this as a base candle. This is a leg candle because some more gap is there. The hidden body also will be added. Maybe it worked today. You may feel it is a, maybe if you are drawing like this, you might be thinking this is an excellent trade. So that is the reason. But according to our approach, this is not a convincing structure for me. Maybe if you are convinced and if you would have taken, it would be a good trade for you. But for me, I didn't plan. Maybe today it worked, such kind of price structure. Next times, they may not work. See, we need to have a very good convincing price structure. Maybe you would have convinced by considering this candle as a tiny candle and you would have drawn this zone. But I am not considering this as I am considering medium size candle. Maybe among medium size, this could be a smallest candle. Among the medium size, this could be the small. If it is some more small, then I would have considered this as a tiny candle. Definitely I would have drawn a zone here. Because of these factors, I didn't consider. But some people may accept this as a tiny candle. You might have drawn a zone like this. This could be a 15-minute zone. Inside 15, again you might have drawn a 5-minute zone. But again 5 minutes also, it's not really the price structure because, okay, you have candles, but this leg out I am not really convincing. At least 5 minutes we should have a convincing leg out, fine-tuned area. So this entire zone again you need to consider as a 5-minute zone. Maybe this could have been considered a leg in. You have 3 base candles. This is the way you would have drawn a zone. So those who have written, this could be slightly it pierced, but this is a, see here, slightly it pierced. And moreover, it is already picked up the orders earlier. See, drop and picked up the orders. See, by considering all these things, I felt this is not a good trade. But if anybody would have taken it, is a lucky trade for you. but I am not happy with this price structures. So that's why I didn't consider any zone here. Actually, this has to be violated, but didn't happen today. Okay, anyway, this is the analysis of our high liquidity zones. Hope this information will be useful to you. Let us all meet again in our next video.